Let's be real. The crypto market is bleeding right now. We've seen red month after month, and you can feel the fear in the air. But what if all that fear is actually hiding one of the biggest opportunities of the decade? We're about to break down a market report that makes a really bold case for exactly that, projecting some massive long-term upside for crypto by 2030. And the key? It's all in the data, which tells a completely different story than the price.
And this quote, it just nails the whole idea. It's a classic contrarian view, right? It forces you to look past all the noise and the negative headlines. The idea is simple, but it's so powerful. Big fortunes aren't made when everyone's euphoric and buying. Nope. They're made when things look bleak, but, and this is the important part, only if the underlying fundamentals are still rock solid. And that's exactly what we're going to dig into.
Okay, but before we get to the big opportunity, we have to acknowledge the reality on the ground. This downturn has been, well, it's been severe. For a lot of people, it's been pretty painful. And we're not just talking about a minor dip here. We're talking about a historically significant losing streak. So just to give you some perspective on how rare this is only the second time in Bitcoin's entire history that we've seen 6 straight months close in the red. The only other time that happened was way back in the 2018-2019 crypto winter. The source report also points out that the price is down 35% since Inauguration Day 2025, just to really underscore how long this pain has been dragging on. And if you want to put a single brutal number on that pain, we're looking at a 47% drop from the peak. A drawdown like that, it shakes out even the most dedicated investors, and it creates the exact kind of widespread fear we're seeing right now. But that's only one half of the story.
So that's the price story. It looks pretty grim, but underneath the surface, a completely different narrative is taking shape on-chain. And on-chain data is amazing because it lets us look past the market sentiment and see what's actually happening on the blockchain itself. You know, who's buying, who's selling, and how the network is really being used.
Right, so the million-dollar question is, what is this hidden data actually saying? Is it just confirming what the price is doing, or is it pointing towards something else entirely? Well, the report suggests it's definitely the latter.
And this is where things get really interesting. First, the monthly RSI, which basically measures market momentum, has hit a level that's historically screamed cycle bottom. Second, wallets known as accumulators, these are the ones that pretty much only buy and never sell, are snapping up Bitcoin like never before. Third, inflows of Bitcoin to exchanges are at an all-time low. Now that's a huge deal because it suggests the well of sellers might be running dry. And finally, the broader business cycle is at its most suppressed point in Bitcoin's history, which means it's coiled up like a spring, ready for a major reversal.
Now check this out. There's this huge imbalance in the market right now. $12 billion are betting the price goes down, while only $3 billion are betting it goes up. At first glance, that sounds super bearish, right? But here's the twist. Extreme pessimism like this can actually be a massive contrarian signal. When a market is this heavily shorted, any little move up can force those shorters to buy back their positions, creating what's called a short squeeze, and that can be absolute rocket fuel for a rally.
So when you put all of that together, this historic downturn happening at the exact same time as these incredibly strong underlying signals, you get to the report's main point. This isn't just a dip. This is a potential generational opportunity. And it all boils down to one simple concept: the difference between an overheating market and an oversold one.
And this slide just hammers the point home perfectly. The same price doesn't always mean the same thing. Think about it. Back in 2021, a price of $67,000 was the top of a euphoric, hype-driven market, a super risky time to buy. The report argues that in 2026, getting back to that same price would come from a completely different place, from a market that's historically oversold, which turns it from a massive risk into a massive opportunity. Okay, so that's Bitcoin. But what about Ethereum? The report makes a very specific and pretty fascinating case for its growth. And the argument isn't just about typical crypto market cycles. It's about a giant wave of money that's getting ready to pour in from the world of traditional finance, or TradFi.
This whole idea comes from Jeff Kendrick, who's Standard Chartered's head of digital asset research, and it's a really clear 3-step process. Step 1, the big banks decide to build on Ethereum because it's secure and has a proven track record. Step 2, that creates demand to bring traditional financial products, like money market funds, onto the blockchain. And then Step 3, that opens the floodgates for tokenizing all kinds of other real-world assets, which could unlock a mind-boggling amount of value. And just to help you wrap your head around the scale we're talking about, look at that number, $7.5 trillion. That's just the size of the U.S. money market funds industry.
The argument here is that even if a tiny, tiny fraction of that, say 10%, moves on-chain, it would be completely transformative. We're talking hundreds of billions of new dollars flowing straight into the Ethereum ecosystem.
So, we've looked at the on-chain signals, the market structure, the institutional case for Ethereum. What does it all add up to? When you put it all together, you arrive at some incredibly bold long-term price projections. Let's get to the numbers.
For Bitcoin, the 2030 price target from this analysis is $500,000. This whole projection is based on Bitcoin's cyclical nature and the idea that this brutal downturn is just setting the stage for the next massive parabolic run-up.
And for Ethereum, the projection is $40,000 by 2030. Now, what's really key here is that this would be a massive outperformance against Bitcoin, all driven by that real-world utility and the value it's going to capture from traditional finance building on its network.
So let's just lay it all out nice and clear. The projections see Bitcoin hitting $100,000 and Ethereum hitting $4,000 by the end of 2026. But the really huge move is projected out to 2030, with Bitcoin at $500,000 and Ethereum at $40,000. These are the big takeaways from the report's long-term outlook.
And that brings us to the final, big question. The data we've walked through makes a really compelling case that this is way more than just another downturn. It could be a generational buying opportunity. So the question I want to leave you with is this. After seeing all the arguments, do you think this is a clear signal pointing to the future? Or is it just more noise in what we all know is a famously volatile market? The answer to that could define the next decade.